Hello everyone, this is Jagtar Shergill, insurance broker and insurance advisor in Ontario. Today I'm going to discuss about mortgage insurance. There is three types of mortgage insurance. One is the mortgage insurance for the lender. When you get the home, less than 20% down payment you pay into the home, you have to pay CHMC mortgage insurance or Genmark or some other companies. If on the $1 million home, on average these days in GTA, it's $25,000 to $35,000 extra added into your mortgage when you get home. Some people don't even realize how much money it's added. All they see the monthly payment, or they remember the how much the house they bought for and how much they paid. They never see when you sign the papers with the lawyer and how much balance is still there. Sometimes all your half of your down payment is gone into paying the CHMC fee or the land transfer fee or lawyer's fee or many other fees, and the balance is still almost the same as the mortgage when you do get a home with less than 20% down. So there's no choice, you have to get that mortgage so insurance. So you pay almost $25,000 to $35,000 to cover your lender in case you cannot afford the payments. They still have that their money covered. And second one is home insurance. You get the insurance on your home for fire and water damage or any other kind of disaster, natural disaster, so that bank can get the money even if your house is destroyed. So you cover your bank through home insurance. So you give them two insurance actually to the bank or lender, one for their loan, one for your home, so that either way they cover the loan and they are granted to get their money back with interest. And third one is insurance on yourself. So after paying for the insurance on the lender's money, insurance for home, people forget about insurance on themselves, insurance for their children, insurance for their spouse, insurance for their elderly parents who living in the home. And that's the most critical part, because if you are critically ill or you die, your spouse, your children, your elderly parents still have to live in that home. Everybody need a roof over their head. Once you build your standard high or you develop from renting to owning a home, your children or your spouse do not want to go back to renting the basement or apartment. There's a lot of people living in the basements or renting apartment. I'm not saying anything against that, but once you raise your standard, you get into the home, you want to keep that lifestyle, or your children, your spouse and your parents want to live in that in their home, and you also want to do the same thing. If your spouse is on the title of the home and they're the main breadwinner, you should encourage them to insure you or your children in case something happens. And mortgage insurance is more cheaper than the default insurance for the lender with CHMC, and second one is home insurance, which cost up to $2,000 or $1,500 for the year. So, and mortgage insurance you can get maybe in $100 per month, like a term mortgage insurance or universal mortgage insurance, where you get your money back even if you're healthy and stay very good till late 80s or 90s, and you don't need insurance at that time, but you want your paid premiums back or cash value built in that. So which is least expensive or cost you don't do that, and which is more important to insure is your life. Because if you are a 35-year-old person and making average money, on average people make about 2 million to $3 million in a lifetime, or up to age 65 in their 30 years period. So you don't cover that $3 million of your life earnings, but you cover the home, which is $1 million worth or mortgage about 1.1 million or $800,000. So that's a complete opposite. What you should do, you should cover yourself while you have to cover the lender, and you have to cover the home, because that's required by law, but which is not required by law, but you should think consciously. Your conscience should tell you that while you're protecting the lender and protecting your home, why don't you protect yourself? So it's very important to get mortgage insurance. These days interest rates going up, and it's very hard for a family member to qualify for mortgage again. Even two people have to have tough time to qualify for mortgage, because your capacity to get a bigger mortgage gone down. And what happens if you die, or your spouse die, and how can you afford your mortgage alone, or renew or get a new home if you ever go into another home? And it's a tough situation these days. Interest is going up, and your chances of getting a bigger mortgage going down. So best is to cover yourself, get mortgage insurance on yourself, to cover your home, your loved ones, your parents, and yourself. And give me a call for more question at 416-831-0215, 416-831-0215 here in Ontario. Or you can email me, my last name shegill.insurance@gmail.com. I really appreciate watching this video. I hope you learned something from it, and please subscribe to my channel and put a comment on there, and I put another video based on your comments. And I'll say be safe, and God bless you. Thank you for watching.